thing is, everyone knows there's been a lot of troubled properties in senior housing in the last couple years, and a lot of times lenders and the receivers have to turn to a professional organization to basically take over the property and turn it around. And I'm here today with Gene Grace, Gene Grace, president of Grace Management. He's got tremendous experience in turnaround properties, and you know, your firm is brought in a lot of times. I mean, I don't even know how you handle this many. Sometimes I hear about this because turnarounds are tough. What's the major pitfall to be wary of when you and your firm comes into a distressed situation for a lender?
First off, thank you for the opportunity to meet with you.
Pleasure.
I think that the major issues that we find is the staff confidence and the lack of really distrust that they have had by the time you get to a point of foreclosure or receivership. And there's always a tremendous amount of deferred maintenance, reputation issues, vendor concerns. So the ability to stabilize the asset and show a certain amount of strength and leadership to the staff is probably the single most important key point that we would see as far as a pitfall. Because the staff really generates the confidence of the residents, and if you don't have the staff behind you, you're not going to have the confidence of the residents and their family members.
And that's all I hear is staffing is always the biggest issue.
Right.
So to get them on board with you, I'm sure, you know, or the pitfall would be, you know, what happens if they don't? And people make the assumption, so that's key. And I know you've been very busy the last 24 months, but do you think if we're kind of over a hump in the market, do you think we're going to be seeing more distressed properties going into 2011, or is it going to kind of slow down a little bit?
I think from our perspective, we're seeing slightly more over the next 12 to 18 months. I think that there's a lot of people who are looking at restructuring their loans, doing some loan workouts, some refinancings that are going to occur. Some have already started the latter part of this year and the first part of next year. We've had several calls just this week on potential loan workouts, and it doesn't always necessarily have to lead to a receivership. It can often lead to some sort of consulting. We really do our best to try and talk ourselves out of receiverships because it's not always the best solution, particularly when licensing and insurance issues are involved. But I see a slight increase in it, unfortunately. And although it's not the bread and butter part of our organization, it is something that we enjoy doing and benefit by seeing enriched values of properties that we get associated with.
And in the properties that you manage around the country, are you seeing, is occupancy slowly kind of on the rise now, and are you able to start putting through, you know, decent rate increases?
I think in our case, particularly if we're focusing on the turnaround type opportunities, we don't see a lot of opportunities for increasing revenues or increasing rental rates. We're really looking to stabilize. In fact, we had some cases where we've actually reduced rates because they were inappropriate for market conditions, which is why they got themselves into trouble to start with, where they might have been over leveraged and had to have the higher rates in order to support the what quote unquote value as it was perceived in the lender's viewpoint. In some of our traditional properties, which are more of our bread and butter longer term clients, we have had the opportunity to increase rates in the 2 to maybe 2.5% range, but it really depends a lot on the market area and your competition, and it would be, I think, irresponsible to just have a blanket statement that we've been able to unilaterally increase rates.
Right.
It's done selectively, and if it is, it's in the 2 to 2.5 range. I will say that we really like to have some increase, even if it's a 1%, just to have the feeling that there is something. Most residents are very receptive to that. As long as it's competitively priced and you're not pricing yourself above competition, I think we should be increasing rates by at least a 2% increase.
And then in some of in the properties with some occupancy challenges, to deal with that, do you guys look into Medicaid waivers? Do you look into the VA programs? Do you have any strategy on that, or?
We currently operate in 15 states. We've operated in as many as 25. So it really varies from state to state, where some states are more attractive as far as pricing, and we have used a Medicare waiver program. successfully, and we like it. But I think that owner-operators can have a kind of a false sense of security by having too many Medicaid waiver residents. There's a lot more paperwork involved, and I think it can affect the overall mix and value of the income stream. There is a certain amount of unpredictability to it, maybe with the new revisions within the Obama health care program that so many of us are somewhat uncertain about. I think there's going to be more cram down on the part of the states for looking for revenues, and I certainly wouldn't rely too heavily on it. We have experienced some increased interest and are looking more in VA programs, which is another vehicle. The monies go directly to the family members. There is a long period of time for approval process, but I think you're going to see increasing interest on the part of if you can qualify for VA programs.
Okay, and what is you're basically a third-party management company? What's the main way you compete for business, whether it's distressed properties or non-distressed properties? How do you get out there and let them know you're the company to hire?
I was talking to an associate this morning, and I was wondering, how do people get started all over now? Because as a management company, and we have tried to help other management companies, we have an advantage in the fact that we've been around for 26 years. Both of the principals, my wife and myself, formed this company over 26 years. We're both certified property managers. Grace Management is one of the few companies that are an accredited management organization with the Institute of Real Estate Management. So it gives us a lot more credibility. We're not a startup. We've been around. We've done it a while. So competing in a relatively small area, at least as far as the receiverships and turnarounds, has been good for us. As far as overall competition, I think it boils down to just integrity and honesty and the quality of the financial reports that you're preparing. We're completely independent, so we're often sought out by lenders and trustees and troubled situations, as well as investment groups, because we're not trying to buy the asset.
But is there one, for a trustee on a loan or a bond issue, is there, when it runs into trouble, if you could pick one reason why they turn to Grace Management, what would that be? Responsiveness.
We're 24/7, really. We have an incredible staff of dedicated professionals in our organization, many of which have been with us 10, 15, up to 22 years. So it's really a stable of professionals from the southeast to the Midwest to South Central area. We cover a pretty good sized geographic footprint, and it allows us to be as responsive. We've been in cases where properties have been troubled and have been there the following day. We don't like assignments like that, but if we have to, we're capable of doing it.
And they know you, and they know that you're going to respond quickly. So
yeah.
So that's a big plus. Well, I hope you.
We had a client once that advanced us $100,000 in the afternoon to cover payroll that was due 2 days later and hadn't even officially contractually hired us. So it gets interesting.
Well, if you have a reputation for integrity, they're not going to worry about that.
That's true.
Well, good luck. I hope you
Thank you.
continue to manage a lot more of these distressed properties. Although I'm hoping the distressed properties will start to finally decrease. But
yeah, me too. I think it'd be good for all of us.
Well, I'm sure they're going to always be around. So you're always going to have a lot of business.
Thank you very much. I appreciate this opportunity.
Thanks for sitting down with me.